Good evening, everybody. Welcome to the Luck in Your Success trade and market update for May 5th, 2013. Before we get going, just a reminder that this is for educational purposes only. We are not broker-dealers, we're not financial advisors, we're simply trying to educate you guys, and therefore we are not making any specific trade recommendations. Remember that any trades and or results covered in this presentation may or may not be live trades. In the event they are computer simulated, we do the best we possibly can to make sure they're accurately represented. However, it is possible they could be different from live positions. Also, the risk of loss in trading options is significant, so please be aware of all your risks prior to placing any trades. If you're watching this on YouTube, please be sure to check out our trading blog and take advantage of all the information we have on the site. Also, if you'd like to take a look at our ROCK M3 and Bearish Butterfly videos, please do so. You can find those at bearishbutterfly.com and m3options.com. Also, while you're there, check out the Options Tribe. It's a great show with lots of great presentations and other good features there. All right, let's take a look at the market. If you remember last week, we were talking about things remaining sideways. However, as they say, news changes everything. The market was pretty much acting as we expected. That is until Friday when we had some decent employment news, and boom, the market took off. So as of this week, we are now in full bullish mode in all of the indices. There is a concern. We had this large gap up. If we get a gap down, it doesn't hold. That tends to change things, and that would be very bearish. However, other than that, right now, all the charts are pretty technically very, very bullish. We had a nice cup and handle pattern here on the SPX, and a breakout from that gives us a range of the cup and handle from this area to this area up here. And that is going to give us a profit target, or not a profit target, I'm sorry, but a price target on the SPX of 1660, which is way up in this area towards the top of this trend channel. Is it going to get there? I don't know. I mean, I think that's awfully aggressive. We're overextended. We've come from all the way down here at around 1540 and blasted all the way up to 1614. That's a pretty aggressive move. For it to go all the way to 1660 would be quite a feat, but the market's been very, very bullish, and I wouldn't be surprised to see it happen. Although, like I said, I think it's a stretch, but that is our price target, 1660 in the XPX. Probably not going to get there all at once, so just be aware of that. However, I would expect a bullish move to that area. If we come and look at the Dow, we have the same type of thing. We have a nice cup and handle here. If you look on the shorter term charts, it's actually a inverted head and shoulders continuation pattern. This gives us another nice target for a breakout. If you take our measurement from here to here and you extend it onto the breakout, we're having a target of the Dow of 15260, which is up in this area up here. Wouldn't be surprised to see that. Again, the markets are overextended, and that's a stretch. It may stall a little bit on its way there, consolidate sideways for a little bit, but that is our target. The NASDAQ is finally participating in this rally. Look at this nice rip up here. We had a broadening pattern coming in, and usually when we break a broadening pattern, we're going to measure from here to here. We're going to add that on to where it broke out, and in this case it's going to give us a target of 3030, which is up in this range. Again, I would expect a consolidation sideways prior to that point, but that is our current target. And if we go all the way back to the Russell, we have the same thing. You can call this an inverted head and shoulders. You can continuation pattern. You can call it a cup and handle. Either way, it puts our price target on the Russell up at 1,000. So we may finally see Russell 1,000 shortly. Now it is coming into the summer. We tend to get a slowdown in equities in the summer. We'll see if that happens to be the case here or if they just keep buying. But we have a price target of 1,000. Again, I think it's a stretch. We'll probably see some sideways movement before we get there. And of course, news can invalidate this relatively quickly. We get a gap down on Monday or sometime during the week, and the support level doesn't hold, then that's going to invalidate our whole opinion and invalidate all of our patterns. So we'll have to watch for that. But as of right now, the charts are telling us it's very bullish out there. Okay, let's take a look at our positions here. I'd like to start with some of the simpler ones here. So we'll take a look at our V condors first. The June V condor is down a little bit of money. It's down about $1,000. We've had a very aggressive up move since we've put this on. We put it on at the bottom of this area here, and we've had just this really, really aggressive up move. So we are down a little bit, which is actually fairly unusual for a V condor with an up move. However, We are down a little bit. And as the market actually settles in, it'll come back fairly good. Let's take a look at what we've done here. The only adjustment that we made this week was to buy back another one of these 990 calls on Friday afternoon. We came in here and our delta was like 111 or something like that. We want to cut back down to around minus 80, so here we are. And we come into this, and let me just back this out a little bit so that you can see it a little bit better. And this is what our position looks like now. Really not much of a problem here. I mean, if we got another explosive breakout to the upside, it may be a problem, but if the market slows down at all, then that'll be really good for us, and we may even be able to sell some of these back off again, get up into this area here, which would work out quite nicely. If it continues to push up hard, then we may end up actually having to do a rollback, which isn't terribly common, but we'll go ahead and do it. Of course, buying back these calls puts us at the risk of having a reversal issue. If we have a reversal, we will sell these calls back off. We will start popping out this V to bring our expiration line up. But as for right now, everything is going fine with this trade, and we're just down a little bit because of the large move on Friday. Let's take a look at our V Condor for May. We're sitting here. We have had no adjustments all week. Price is just here. We're more or less at our expiration line. I am considering making this so that we raise the expiration line a little bit. I was just kind of waiting to see what happened. Well, of course, we got that very hard down move on Wednesday, and I didn't want to get rid of that put, obviously, at that point. And then we had a really hard reversal, and now we're up in here again. So we're about at our expiration graph. It gives us too much trouble. We'll just exit it at a profit. I'd like to get 3,000. If we actually do creep up into this area, which I kind of doubt. I don't think we're going to get there that fast. I think we're going to go sideways for maybe the week, and we don't have a whole lot of time in this trade. So we'll probably end up just widening this V out, bumping the expiration line a little bit higher, seeing if we can pull 3,000 out of it, then letting it go for the month, which will be a pretty much average trade for this trade. And as I said, we're doing pretty well right now. Okay, let's take a look at our June Bearish Butterfly, which was something else we didn't have to do a whole lot to. And by that I mean nothing. I forgot to mention that I did put this on actually last week. I put it on the 25th, which I believe was, yes, it was Friday on schedule. We came in and I bought it earlier in the day because I took the afternoon off, and bought the 930 put butterflies. Couldn't buy the 920s. Delta theta ratio was off. The position had no adjustments, and it's down a little bit of money because we had a very large up move and we were bearishly positioned. So we're down about $1,200, which is really nothing for this trade. We are borderline delta theta problem. Basically, if we get any kind of an up move next week, we're going to need to roll this to 950. I'd like to see if it holds a little bit first, though. So here's our position here. We start pushing up a little bit higher. This will be rolled to 950, which is right into here. No problems or concerns with the position as of yet. Speaking of bearish butterflies, let's go into May. And this has been very interesting for us. If you remember, we did a rollback to this to at the money, I think it was last week. Not last week, but the week before last week. And I stated at the time that the rollback to at the money was going to give us a problem, or was very likely to give us a problem. So I wasn't going to roll back the live position. I was just going to keep it live at 940. But I would roll back the paper position to 920, since that's basically what it said in the guidelines. Again, given the technicals and the very harsh bullishness of the market, it was a much better move to stay where you were, and had you were, you'd be up a lot of money right now. But we did the rollback, and we wanted to make it interesting, and the market didn't disappoint us. We rolled back, and the bulls came in and bought the support level as expected. That allowed us to scale into the position, which was good. Had we stayed range bound, it would have been really nice. But what happened is we got that nasty sell-off on Wednesday, which kicked us back a little bit. And then we had the hard reversal on Thursday, and of course then we broke out our range on Friday. So that's going to make it, that makes it really, really tough on a fully entered bearish butterfly near expiration. And we can see it in our profit and loss. It's like 2/3 to maximum loss. We had a max loss of 15,000. So just as a synopsis, if we kick back to Monday, actually we'll kick back to last Friday. If we look at this, we were in 920, 940, 960 butterflies. We come to Monday, there were no changes. Go to Tuesday, The continued up move forced us out of 5 of these 920s. Had the hard reversal on Wednesday, which forced us back into the other 5 920s here and out of 2 of our 960s. Profit and loss is getting beat up because we had, like I said, a fairly harsh move here. We were fully scaled in. We're near expiration. Same type of thing that happened here. We got beat up a little bit with volatility. On Thursday, we didn't need anything with the market bounce. Just kind of bounced and stayed in our delta range. Profit and loss came back a little bit. We sat in a position that looked like this. And of course, with that big gap on Friday, that put us down quite a bit. So if we come into Friday, had the big gap, I came right in and aggressively adjusted this on Friday. Ended up in 10 940s, 10 960s, 4 980s. Delta closed nice for the week, and the position kind of looks like this. So we shall see if we can get the market to settle and get some of this money back. As far as the rest of our trades, we have our June M3, which had no adjustments. This is up about $288. This is what our analyzed graph looks like. We are way outside the tent. Our Vega and Delta numbers are fine. So, and theta numbers are fine. I'm not overly concerned about it. However, if the market continues to go up, I will make some adjustments. There's 2 different ways we can adjust this. We can continue with the verticals and just kind of raise this up a little bit, or we can go ahead and roll it forward. I actually haven't decided which one I'm going to take yet. I'd like to see the movement on Monday. Of course, if we have that gap down, which is not expected from some kind of news event or whatever, then I'd be happy to hold here because there's a very good likelihood we'd be back in the 910 range, 900 range. If the market seems to like it wants to hold, then we'll make the adjustments. And last, but certainly not least, is our May ROCK trade, which didn't need anything all week except for Friday. So basically all week we were kind of sitting in this position. Let's just go to Thursday with 10 920s and 10 960s. The position, like I said, was just doing great. All was going smoothly, and of course we had that really big gap, which put us down. And because of that, we started scaling into these 980s. Like I said, I started hitting this aggressively Friday morning. And if we come to the end of the day on Friday, we ended up with 9 930 butterflies. Take a look at our T-log. We came in right at the open. Bought 6 of these. I don't normally trade at the open, but I saw the market as very bullish. I didn't know how far it was going to go. So I came in and I hit it. And then just a little bit later, it continued up. I hit it with 3 more. And I was able to hold that position for the day. Right now, we are, well, as of Friday, it looks like it's showing up about $650. And we're sitting quite nicely here. If the market turns around and crashes and we get whipsawed, then you get whipsawed in this trade sometimes. We'll just deal with it. If the market continues to go sideways and creeps up, this is going to look really, really nice towards the end of the week. So, happy with most of the positions. The only one I'm not happy about is the paper bearish butterfly position because, we wanted to make it interesting, and the market certainly did that for us, and it should be fun. Okay, that is all I have for the week. I'll keep you updated with any changes. Thank you, and good night.